let's start the presentation. We'll put in the chat your links to LinkedIn. Introduce yourself, and let's start. Those who don't know me, my name is Alex Lotnikov. I'm the founder of Terra, and I'm an active venture scout in a couple of venture funds, like Level Up Ventures, TGW Ventures, and a couple of others. My microphone is.
Okay, hope it's better. So let's start. Today we're talking about how we building our investor list, and basically, from what I see, most of the startups are doing it wrong. They either don't build it at all, or they just take something that already really out there, a big list of 1,000 names, and try to randomly reach the people, thinking investor invest in everyone, and this is the big problem. So today we discuss the correct approach and how to avoid the mistake and save your time. So basically, how the list should be structured and how they work. Basically, investors are built by criteria, and then by specific criteria they have. We'll discuss. Let me just let the last people in. Okay, so basically here we see an example, big list, but only the specific criteria are with our startups. So for example, from the big list of 200 people of investors, we usually can have like 20, 30 that actually will be fit, even if they fit the basic criteria for what you think your stage, pre-seed or seed, for example. Most of them, they be in different verticals, different countries, geographies, and sometimes even the check size is not a fit for you. And the common mistake that founders do, they approach the research of the investor after they already built the list. And they took the list from OpenVC, any other LinkedIn post that said like 100 top VC in AI now. And then they start research this list, this 100 people one by one, after they already decided that, oh, okay, this is my investor list. So this is the wrong approach. And the correct one is first to understand the 7-point criteria that you need to know for your investors. Basically, you need to approach the investor research as the most hated by founders thing that is sales. So you need to decide who is your ICP, but investor, like your ideal investor. So first of all, of course, it's stage. If you are pre-seed startup, you're not going to seed startup with like the seed investor with the hope, okay, they probably could invest in me. I'm almost seed, but it's not. So if you are on the pre-seed, don't try to reach bigger investors who are never invested in pre-seed and only follow the second round. It will be just a waste of time. We can like connect with them for the future, like next year you'll raise just to be on your radar, but don't need to waste the time trying to pitch them right now. Then of course the sector and thesis. Each investor has its own thesis. Of course there is some generalist investors that invest in general verticals. They just see by the deal, okay, that's good, I like it. It's a broad thesis, and these investors usually not very relevant to you specifically, but you can try to reach them. But you need to look on the core thesis. Usually, each investor has like we invest in a pre-startup that build fintech AI products for US market. If you are not there, if you're building not a fintech, if you're building a legal tech, that's probably a mismatch, and you already can filter out this investor. Geography fit, it's basically where they invest, and sometimes also apply to where the founder located. So it's also better to check investors that invest in Europe and don't touch Israel, then no need to reach to them if you're not planning to relocate or open the company. And in the US specifically, sometimes investors looking for the founders who are already located in the US and not abroad, even if they have US company. So sometimes it could be a limitation. This is another one that you need to uh, take aware of it. Then the check size. So the check size is the basically how much investors can invest to you, and also the minimum amount that they can invest. For example, if you're raising like 2 million round, then you're looking for checks like 500K, maybe a bit less, maybe a bit more. But the 10K check, you can't allow a lot of them. Otherwise, you need 200 investors. It's unrealistic. And you may get a couple of angels that do this small investment, but you need a bigger one who will lead. And it's also work on opposite. If you're raising a small round, 300K, you don't want to reach investors whose minimum check is 500. So you just don't fit their investment amount. And it also will be a waste of time. And then we go to the criteria that founders often miss. And this is the activity of the fund or an angel investor. This is harder to check because it's usually not written. You can check it in their portfolio or announcement that they do in the internet, LinkedIn. You read in the news that they lead it round, to join the round, but you need to check. Sometimes you can see the fund did not do any investment in the last year. So they probably out of the money or they looking for like specific deals only. And this is like very low chance they will invest in you right now and that you break there until they get a new fund. That's also possible. And the sixth is the thing that I just talked about. This is basically the fund life and the signals of investors. So the funds is also something that not all founders know how it works, but basically then investor raise the fund. The fund usually has a cycle of a few years until they have to generate a return to their fund investors, limited partners. So basically, it's about 5 years in general and the funds most actively in the first couple years, and they're looking for deals and investors. They have a money, and then they save some money for the follow-up rounds, and they can just get out of the dry powder that basically the free money that they can invest, and they won't be very active. So if you see the fund in you, it is a good signal. If the fund raised it 3 or 4 years ago, they probably already out of the deployment capabilities. So basically, the good thing to check is it's also read the news, see the portfolio, and you can look when they raised, usually they announce it, how much it was, and you can kind of guess where they are right now. And also check their last investment because they rarely update their status on their websites. So you can go and see they still invest in fintech, but actually they maybe already switched. And you see in their portfolio like health tech investments. So okay, they maybe have a new focus now. It's good to check with the partner or something like that. And the most important and the one that everyone almost skipped, as I notice always, that the portfolio fit and mismatch. So often founders think, okay, they invested in my competitor, so they also invest in me. That's like the biggest red flag. If they invested in your competitor, you don't want to approach this investor either, because first of all, they can get like private data and leak it to a competitor. It's already happened sometimes. It's not a good fit from investors. It's a good move to do, but sometimes they do that. Um, and basically, the good signals here, what you're looking for is this company in the similar space that not your direct competitors, but could be addressed to your same clients. For example, you're building AI lead generation tool, and they have invested in the CRM system. It's kind of same clients, but it's not the same competition. It's adjust products. So it's a good way to reach investors and tell, hey, I saw you invested in the CRM, we can help them. And in the worst case, maybe they can do an intro and you get not investment, but at least a client or a partnership. I will answer the question later. But put them in the chat, and yeah, we will get to the Q&A section after the presentation. So how we start looking for investors if we're not going to the big list that you can find in internet, and you probably already have all of them. We're doing in the bottom up, and basically we start from the building this list by ourselves, but already with relevant investors there, at least basically on the first fit. So we are looking for recent fundings in similar space. Just find the similar company that operates now and you saw they raised. You can usually see who invested in them, and it will give you like 1 to 3 funds that you can point out doing investment in your space. And the portfolio, as I mentioned, it's the after you like one of the investors you found, for example, can go to their portfolio, as you already know they invested in the similar company, similar space, and in the portfolio find more companies, and you can look for their investors as well. So it's kind of like waterfall logic. So it will give you more and more investors that are operating similarly. Your own network, of course. If you know someone, other founder, um, anything you can reach, and you can also use the lists, but recommend limited or like filter them very very deep. So because this list, the problem everyone have them as well. So you going to the same investor everyone goes to, and not all of the investors are there. So if you go to those who actually deploy now, you have a better chance than others. So the basic fit, as we told, the basic is like stage, sector, and geography to match the thesis fit. If anything of this does not fit, you can just mark this investor out. They will never invest in you. Don't waste their time of 5 meetings. Investors like to take meetings, and they don't like to tell you no. They always want to have an opportunity to reach out to you when you uh, give them a deals. So this is will be waste of your time if you go to wrong investors. Then after we get this first section, then we try to structure the round itself. So usually if you have a small round, like more fit for angels, then you want to decide how many people you want on your cap table and who will lead, no lead. Small rounds, you usually don't need a lead. You just maybe one micro VC that give a small check, and then the rest are angels. And for the bigger round, you need a clear lead that give more than usually like 30% of the round, sometimes even more. Then the follow-up investor that give a smaller check, and you don't want too much angels on the big round that will give you a messy cap table. So you want to limit them and don't get 500, like 5K checks from everyone who want to join. You also have to be selective this case. And as we discussed, so basically the past investment, that does not mean they invest right now. So we need to look for signals. If they invested in a similar company 2, 3 years ago, their thesis already may be switched. Sometimes they fill their portfolio the same companies already, and they want to diversify, of course, and they go to the different sections, different sectors. Recently, we have like a pitch competition, and there's an investor that said, okay, we invest in this space, we like this product, but we already have like 5 companies doing operating there. We can't allow more. We want to diversify another space. It's also now the focus, but we just don't have enough companies there. So try to look for the news, LinkedIn announcement, and the partners. They often post some information, some post about this. And this is about the structure of the fund life. So basically, as I mentioned, how the fund works. When they raise the 100 million, it's not doesn't mean they invest 100 million to you or to other startups. They have a management fees that usually like 2%, so it's already 2 million out of the fund, and then they have like up to half of what rest to the investment now, and a lot of the funds they also go for follow-ons, and basically they need to save money to invest in the same company on the next stage, so basically in a year or two. So this fund is also not available. So you can guess basically fund is 100 million, and they have about 50 million open for investment. You see the portfolio, they invested in 20 companies, and their regular check is $1 million. That means they probably invested about 20, maybe 25 millions because some checks valued. So they have maybe half of this money, like 25 million left. So one of the quarter of their actual fund left only. So they probably will be a bit more selective at this stage. And if you're not fit the tests perfectly, they could pass. This is about the portfolio. We already spoke about it, but basically the competitors, we are out of this. The adjustment in the vertical, it's good. And the fit, the best fit, if they can align with one of the companies and copyright with them, that's usually the best. After we found the fund itself, now we need to identify the right person to reach there. So usually funds have a few partners, and the partners usually looking for the different verticals. If the fund invests in AI, fintech, and legal tech, sometimes they have like 3 partners that everyone take the specific verticals. So if you are in legal tech, you better try to reach the partner who doing these deals. So he can vote for you and pitch your startup on the internal meeting and decide. Look for this on LinkedIn, and and the funds they often put the team, some bio about them. You can read that and get the information. Then to try to find the warm intro if you can from the mutual connections, maybe know someone who they also know. Maybe you can see that the investor going to some event, try to go there, meet them there. If no, if you don't have a warm interpass, then of course do the cold outreach. I recommend first try to reach on LinkedIn, then send an email. And last chance is just to apply on their website if they have the form. But you should try to reach directly to the partner or someone in the fund to make an intro for you. So after we get those investors, we want to qualify the list that we build. And this also should be qualified. I recommend usually get 3 steps. So the first, like the best one that you want, like almost 100% fit for what you understood about them. This is your best shots, so don't do them first because you don't want to miss them. Second one is like possible match. It fits most of the criteria, but you're not sure about the sum. You don't know, maybe the fund life not clear, maybe the check size, maybe their thesis a bit unfocused. You don't know exactly, but it could be a good fit. So this is your second shots. And the third one, that's basically not only who fits the first three, four criteria about the stage, thesis vertical, and the check size. And maybe just generalist investors. This is like the weakest fit, but it's probably easy to go to. So you want to start from below. So first you go to the weak feeds to try your pitch, to try to see how it aligns with investor, how your pitch lands, the feedback that you get, and those investors are less likely to invest in you. So it's kind of train and don't reach, like if you don't have time, don't try to reach all of them. Try a few and then move up and try to secure the second possible fit to get them on board and understand if they actually good fit for you. Sometimes investor offer more than just the check. They offer also support, introductions, maybe some help, strategy guidance. So some of them don't offer that, and sometimes you don't want investor who just give you money. But if you don't have an option, take this. And usually then you have some of the traction from other investors, some term sheet, maybe someone already invested, and maybe someone like soft committed and looking for the lead. Then you're like confident in your pitch, and you can go to the most fits, the best fit that you actually want the most on your table, and you are now ready to reach out to them and don't miss your shot and go to them. And basically, this is the workflow that we discussed. So screenshot this. So we define the investor profile. We define this investor who matches profile. We build this broad list of the fitted investors, and we deeply research each one of them and filter out the ranks, and then we are starting the outreach. So only after that, it's basically the sales pipeline, how you're looking for clients, same you're doing for investors. And that's it. We have some time for question and maybe even for a quick demonstration. I think I need to allow you to unmute. Okay, let's see. Let's see the questions. Okay, recording. Yes, we will send the recording. 7 points. Where all this info located? Usually you can find it on their websites. Most of the funds and investors have websites and they put the thesis there. But of course, not all of this is there. You need to schedule a lot of sources, LinkedIn, news, databases to understand all of these points. Nadav, what you said is true. YC, for example, are very pro-investing competitors in the same cohort. Okay, YC, they are the accelerator, they're not exactly the investors. So they announce the verticals before the batches, and they invite similar companies who built in the same similar solution. So their strategy is different. They basically invest in competitors and they see who actually win the market after. So investors they're doing the opposite. They they want a portfolio and they want the winner already. That they make the bet. Basically, the YC is the casino, and the investors are those who make the bets. So this is the difference. So looking on the like YC invest is not exactly the correct way to watch. Um, how would you advise to fund efficiently capital signals? So usually it's as I mentioned, LinkedIn is the best news announcement. Basically, it's a public signal. The databases usually updates much later. Um, and try just to track your competitors, and you will see a lot of signals coming from there. How do I decide what to offer for investors? How can I find information about the partner I want to pursue from their social activity? So basically the same, try to find the LinkedIn, Twitter account, what they post about, and usually it's all of the public information. They want to be public because that's how they get deals. So this is how you go to them. Um, what are you investing in? Okay, I'm not directly investing. I scout the deals. So a couple of funds that I work with, they invest in pre-seed US companies, or I have a couple of funds that work on a later stage, late seed Series A, US, European, and Israeli founders, mostly software B2B SaaS, but also some AI and frontier tech. Um, and another question from Nanda. Um, it's hard not to contact the good investor that invested in the past. Uh, okay, I would say it's worth a shot to contact the good investor, but I would try to contact them when you're ready and not to make it like a first shot. Um, but in the direct competitor, if they have like, you see the competitor in their portfolio, this is a big chance that the information they give to investor go to this competitor, and if it's not what you want, then try to avoid. They probably would not invest in you if they already have this profile covered. Um, which part of the research? I would say try to do less with ChatGPT. Like you can just ask about uh, like if this investor good for me, it give you rubbish. It doesn't know what happened now. The database maybe like 2 years ago, the info that they pull could be late. So it's good to summarize that the resource that you found. So you get some data about this investor, then you can put it in ChatGPT to summarize. And that after all you fill the data, you may help it to kind of filter it and like rank the investors. That's it. But the initial research, as I noticed that ChatGPT and Claude do not well. Um, yes, you should meet the investor before you're ready. Not to pitch them, yes, to build relationship, and so they know that you are building. Usually it's good to create a newsletter for investors. After, of course, you talk to them and you ask, can I add you to our updates? They say yes, of course. And then you can send them once a month an update. Okay, we are starting to raise in September. Happy to reach out when we are ready, and this is a good way as well. You want to have already some pool before you start the race itself. So yes, try to do it as early as you can. Um, the return, exact return of investment, your equity. This is what they get. They get a part of a company in exchange of the money, and then you exit the amount of the exit is going to them, this part that they sold. Or if you go to IPO, then they get the same amount of shares to sell. That's what you offer. Both sides of the round do you want? It's you have to understand by your financial model and like the business plan. You don't just guess the number. You need to understand what's your goal, what this round will fund, and how much money actually you need. What go to the salary, what go to the different spending, how much is unit economics. It's not just guessing. It's a science behind it. So investors will also notice and they ask why you need this money, why you need 1 million and not 500 or 5 millions. By the way, if someone have a question, you can unmute yourself and ask. We have like 10 more minutes if someone have question. Anyone? I'll put in the chat my LinkedIn link. Someone want to connect, and you can scan the QR code and also join our WhatsApp.